Hey everybody, it's Jim. Welcome back to the Invest Success Podcast. I am Jim Edenfield. I'm here with my partner, my mentor, my buddy, my friend, Tim Emery, who's been with Invest Success since 2016.
16, yep.
Yeah, we own a 12-month coaching program, hands-on training for 12 months. We also host the John Fisher's Breakfast Club, and we host 2 happy hours, one in Rhino North at Blue Moon Brewery, and we're working on one down south. By the time you hear this, we'll probably have that one down south going. But today, can you look at our shirt and guess the topic of today?
It's money.
Money, green,
Money.
the color of money. So
The
Tim,
hardest thing, as every new person says, is the hardest thing about this business is money. Do you think that's true, Jim?
our number one stumbling block when we talk to prospective students, just students, not investors, is like, I don't have a lot of money in the bank. Well, guess what? You don't need a lot of money. But also, when you hear those gurus say no money needed, they're full of bad stuff. You have to have some
This
money.
is the internet. You could say what you wanted to say, but we'll keep it PG.
They're full of stinky
Yeah.
stuff. How about that?
Yeah.
You need some money. You don't need $100,000 in the bank to get started. Our program is reasonably priced compared to others. That's a small investment. When you find a house, we teach you how to use OPM. If you've never heard it before, OPM is other people's money. You can invest with a little bit of money out of your pocket and get good returns. So, Tim, what's some flavors of money that we talk about?
Well, the flavors of money is traditional cash, if you have it. Traditional banks, a mortgage, whether it's a Wells Fargo, a U.S. Bank, any of these bigger companies, really cannot focus on a fix and flip type situation or a wholesale type situation because they are not there for the money. They're there for long-term money. They need their money to work over time. When you're doing fix and flips and when you're doing wholesaling, you need a short money for a short amount of time. So traditional banks won't know how to do this. Now, as a student of ours, will we send you to a traditional bank to find out? Yeah, because you need to know and understand that. If you're doing long-term buy and holds, rental properties, whether that's in a residential situation or maybe small apartment buildings, yes, they can figure that out. They can do longer-term holds. But for the most part, what we're looking at is hard money.
We're not talking Guido or Cousin Vinny, right?
No. Most of our guys are so nice, I don't know if they could even think about Cousin Vito. But hard money is money that is short-term, a little higher priced, somewhere between right now 10 to 14%, 1 and 2 points, and a point is 1% of the origination cost of the money that you're borrowing. And it's pretty reasonable in this day and age because as our normal market mortgage rates go up and down from 5 to 8 to 9%, you're not paying that much extra. Plus, you're only borrowing it, Jim, for 6 months.
And it's been consistent. Pre-COVID, through COVID, now with interest rates bottoming out, getting high, they've been pretty stable the entire time.
Yeah. And it's a short-term loan. When you hear 10 or 12%, it really freaks you out, right? Especially 5 years ago, 6 years ago, when we were seeing rates in the 2s and 3s. 10% sounded like a huge amount of money, but you're borrowing it for a short time, so it's really only a piece of the pie. So if you're looking at your total project, the holding costs 10% of the money, amortized over a year, and you're paying it for 6 months, maybe it's $12,000, maybe it's $15,000, but that's a number that puts it into the system to find out if it's going to work or not.
Tim always says, people go, hard money. He'll say, if I loaned you $100,000 at 10%, some of our new people go, that's high. I don't know about that. I wouldn't do that. And he goes, what if it was I offered you 50%, I was going to give you $100,000, and you were going to clear $50,000? Would you do that deal? And they're like, oh, maybe I would. It's a number in one cog of the spreadsheet. It's the cost of money. When you put that ever how high, ever how low, you look at the bottom right of that spreadsheet. Is that number green, yellow, or red? It's a number. If the numbers work,
do the deal.
Do the deal.
Do the deal. And it's really an important mindset. when you start looking at borrowing money, it's a mindset issue. To that example, if you can make 200 grand and you paid 50% interest on 100 grand, who cares what that interest cost was? And that's the mindset that you have to open your mind up to going forward, because that's a lot of sticking point for new investors. Oh, I don't have the money, or I can't find the money. Mm-hmm. So, Jim, where do you find this money, or what makes this money get attracted to you?
Well, let me say this first before I answer that. One is if you go to that traditional bank we were talking about, never go to the big box banks, the national brands. You want to go to a local bank. Those loan officers usually have a local portfolio. They're more freely, they can loan their money out more freely. But the drawback to a bank is look at the house at today's value. They will loan it on today's value. They don't look into the future. They don't have a crystal ball. Hard money people, we have a little crystal ball. We can look into the future. Yeah, that house is worth $100K right now. But if you're going to do all that you say you're going to do here in your scope of work, that could be worth $150,000, $200,000, $300,000 home. They're looking at that number. So that's what the differences is. And that's why would we want to do it? And why are we willing to pay that interest rate is I can do the deal with them. Nobody else is going to give me the money. And you said, where do I find the money? Mm-hmm. If you come to events like, I'm going to throw our hat out there, our breakfast club, our happy hours, our Realty Investors Group, RIG, we have money people in the room. We've got hard money people. We've got commercial people that will help you refi out of a flip if you're going to do a buy and hold. You use hard money to purchase it. They help you fund the rehab. You do the deal, and then if you're going to sell it, you sell it and pay off your hard money and pocket some cash. If you go, wow, this is such a great deal, and in whatever market I'm in, the rental market works, I'm going to refi it and still pocket some money and get a monthly thing. But there's hard money, there's private money. There's private money. There's people like me. I'm a private money investor where they've got money in a 401k or some kind of retirement plan that's not multiplying as fast as we would like. You can move it into certain kind of funds. And like my fund, I have checkbook control. I mean, I've lent 10 money. I've got other friends that I loan money, and because it's me and I'm dealing with my friends, I don't try to gut them and kill them. It's like 1 point and a reasonable rate. And if you extend, no problem. Go ahead. We'll just add a couple of months of interest. Some of the companies, the big companies, hard money companies, they're a little bit strict. They're like, hey, if you go and extend, we want another point. We're going to have to refinance. Each one has different rules. I say if we lined up 6 money lenders here, hard money, they would have 6 different guidelines, 6 different rules, 6 different ways they do your deal with you. And and we tell our students when they start, interview several money sources and ask them, okay, what's your points normally like? What percentage do you loan out? How do you do draws? Draw is they're giving me money to do my rehab, say $50K. Well, do I get all the $50K at closing? No, very rarely. But it's usually a lot of times it's like, go ahead and finish a phase, do the kitchen, do the outside painting, do this, do that. As you do that, and we confirm, yep, it's done, it's good, they will pay you for that project. So you want to negotiate that and work out with the contracts. I'm dealing with private money, so this is how I get paid. How do you want to be paid? So,
yeah, Jim, great points. The real thing about this business, and something that y'all need to understand, is the deals really show what's going on. When you find that right deal, when somebody can look at your numbers and analyze that deal themselves, hopefully they're trained enough in it, they can see that deal is valuable. They're going to get paid back. And by the way, everybody gets paid before you do in this business. Okay? So your real estate agents, your contractors, your insurance people, your title companies, everybody gets paid before you do. And whatever's left is your profit. You do it right, it can be great profits. So realize that as you go forward, everybody's going to get paid. But that's why we were looking for that great deal, right? We're looking for that deal that has enough spread. If you're buying a property for $300,000, you're putting $80,000 into it, you're selling it for $500,000. There's enough room in there that you are going to make money, and you've got to be aware of that. because you're not doing this job for the heck of it. This is a lot of work. But when you make that money and when you show that deal to somebody else, it's a great deal and they understand it. Now, the other big key to this business is when you're borrowing money from people, you're giving a promissory note in deed of trust, okay, on that house. Now, if it's one or two people, the people have to know which position they're in. But the main point is that the house, when it's done, should be able to cover the whole cost of that loan and all your fees. And once that's done, you can tell your uncle, your friend, your neighbor, whoever's willing to loan you that money, say you're guaranteed a house. So if something happens that you're not here to finish it or something happens, there's money is fairly safe. It's not perfectly safe, and there's no totally safe investment in this situation, but you have a lot of value and you're trading a promissory note and deed of trust for that.
Yep. Tim says it's a lot of hard work, but actually, if you're doing it right, and the way we teach our students, you're going to use other people's money, and you're going to use GCs, general contractors, to do the majority of the work. Majority of our students, with the exception of maybe 2, maybe 3, all have full-time jobs. There's a couple of them that are doing this full-time, and they're doing it. Still, they're not swinging the hammers. They're watching and managing one person while he manages the orchestra. So
yeah,
it's not that hard. And you can get different levels of money per deal. We've got several active projects going on right now, whereas we've got a different combination of money. We did a hard money with one. We brought a private money investor in as part of a participating member in our LLC. Again, very little of our money, but we're managing the property. We're finding it, we're funding it, and we're doing it. And then when we sell it, we're going to pay our hard money off and give our investor, pay his money back and give him a slice of the profit. Other projects we've got going, we got one guy that's doing a private money loan to us, sweeter deal than hard money, and then we've got a private participating member of his money. We've got 3 projects right now we've got one person come in partnering with Tim and I, and they're funding the whole deal. They've got the money. It's not working in their 401k. It's not working in a retirement plan. They want to learn how to do it. They don't have the they're a little afraid to pull the trigger and jump in it by themselves, so they're jumping in with us, and we're doing it. So there's a lot of different ways to get money. Don't get locked in. I don't have $100,000. I don't know if anybody's starting out with $100,000. If you got $100,000, just go buy a house and do it.
Yeah, it's really about finding the deal, guys. When you find the deal, you can find the money. If it's not a deal, and oftentimes we get people that say, oh, I've got this great deal, but I can't find any money. Well, then 95% of the time it's because the deal isn't that good. And people don't see the value in that deal. And that's because they do their own research on that deal. So be kind of cognizant of that. When you think you found a deal and there's nobody buying that deal, well, there's a reason. And ask them why they don't see the value in it. Because they may see something that you're not seeing. A lot of wholesaler deals, a lot of properties that come out when you first think you've got it. You find a house that backs to a busy street. Well, if you know anything, backing a busy street is a 20 to 30 grand low. You know, it depends on the neighborhood, but you could plan on selling that 20 grand lower than the rest of the neighborhood because people don't want to live on busy streets. So really be aware of that. Now, if you've got 3 properties that are all lined up on that busy street, then by all means, if you have proof that says this house will sell at that price, then it is a good deal. So really be on the lookout for that type of stuff.
Yeah, there's a saying out there, if you find the right deal, the money will come. You come to a networking event like ours or others where there's investors and go, hey, I've got this killer deal. Here's my numbers. And if those numbers are close to being legit, and then somebody's got money, the chances are to go, hey, I'll partner with you. Partner with people.
Yeah.
You know, I've got the property, you got the money, or I got the property and money and you got the experience. Let's work together. There's enough room in the sandbox for us all to play together, work together, and make money together.
The greatest thing about America and the United States is if 2 people agree to do something, you can do it, right? You got to put it in writing. you've got to make sure, and that's a recurring theme in this podcast that you're going to hear over and over again, put it in writing. But if somebody's got a piece of property and they don't have the skills or the ability to fix it, well, how can you work with them to say, okay, you're going to hold on to the property, you're going to pay the bills, okay, you're going to pay the mortgage, I'm going to go out, I'm going to find the contractor, I'm going to put work on the deal together. We can be a 60-40 split, some type of thing like that, and just negotiate that out, determine what's going to happen in case something bad happens. Really prefer you have a lawyer look over your documents or put it together, because Jim and I aren't lawyers. We're not CPAs either. By the way, that's going to be that's a disclosure on every one of these podcasts. Do deals together. Figure out who's got the value. What can you bring to the deal, and really make sure that stuff works together.
Yep. I mean, the numbers. He's talking about recurring theme. Some of our recurring themes is know your numbers, know how to be able to. We did a previous podcast about wholesalers and how wonderful those flyers come out, but you need to be able to determine your after repair value. Very realistic. You need to determine your rehab budget, because Tim's rehab budget is going to be different from my rehab budget, and it's going to be different from Cade's rehab budget. It's all because we're all three going to do something different. But know what those numbers are. If it's realistic, then yeah, you've got a deal and move forward and share it. And trust me, if you'll find people that want to be a part of that. If worst case scenario, if you can't find the money, then nobody's willing to give you money. Chances are, if you're in the right circles, doing the right networking, wholesale the deal. We talked about, there was a whole thing on wholesale. So wholesale it. Just say, hey, I've got this deal. I just can't pull the trigger right now. But Tim, I know you're an investor. You got a little bit of money. How about that? Here's the numbers. They're legit. And chances are you can make a little change on handing the deal over to Tim.
Mm-hmm. Yeah, all great things.
Yep. But we talk quite a bit on money, because money, on our coaching calls, our weekly coaching calls, we're always telling about people, we talking about interviewing. And another thing, too, is you want to interview several companies, find out how they operate, and not just talk to them, but say, hey, who are some of your customers? Find out, hey, how are they well to work with? What's their draw procedure like? There are some great hard money companies out there, some great private money people out there, but there's also some bad players out there. Some of them are very keen to, if you blink an eye, if you're a day late, they take the house back from you. The people we deal with on an ongoing basis here in Denver, we're friends on a personal level, we're friends on a business level, and a lot of them, they may turn you down if it's not a good deal. They don't want you to lose money. They don't want to take the house. They're in the business of lending money, not flipping.
And that's a good point. If you find investor-friendly people, lenders, bankers, whatnot, they're going to tell you if they think it's a deal. And if they don't think it's a deal, then it's not a deal. If they're not willing to loan on it, it's not a deal. So,
there's a reason.
yeah, there's a reason. So, Jim, you want to wrap it up?
Yeah, we're coming down to our 2-minute mark. Again, invest success. Money is just one of the things we talk about constantly, but we hold classes every other Monday night in a house that belongs to our students. It's going through all phases of the construction process, either demo, in the middle of demo, or, hey, it's staged, it looks beautiful. We do a Saturday property tour where we teach you how to develop that ARV, that rehab budget. We invite you to come to any of our classes that are, completely free, no commitment, and just go to our website, invest-success.com. Top right-hand corner is join a class, and come see us for free. We also host happy hours. Even if you're not going to be in our mentorship, come to our breakfast club, John Fisher's Breakfast Club. It was founded by John F. Fisher over 20 years ago. It is still going strong. It's anywhere from 20 to 80 people of serious investors in their networking. We play this game from time to time. Raise your hand if you did a deal with somebody in this room last month. Hands go up all over the place. We have a time in networking. We have breakfast. We have introductions. We do a little market talk of what's going on in Denver. The different markets is rentals, buy, what the money's doing on. And then we're back to networking. Every month, Tim and I are having to kick people out. I was like, we got to go. Come on, go live. It's Saturday. Go have it. We do that, and then we have a first Wednesday of the month, we have a happy hour at Blue Moon Brewing in Rhino, 5 to 8. awesome networking time. It's mainly just networking, but then again, we take just a little bit and talk about what's going on in Denver. We let our sponsors talk about their services, and we have now a happy hour down south. Check out our website, invest-success.com. Go up the top, click on Join a Class, John Fisher's Breakfast Club, or Happy Hours. Come join us, and we hope to see you. And because you're listening here to the end, I'm going to do a plug. Because you've been good to us, we want to be good to you. If you want to join our mentorship program, we'll give you a $1,500 off discount to their 12-month program. Just when you send in and sign up, say, Jim, I want to save $1,500. But that's us. Thank you for listening to us.
Thank you.
As Tim always says, go out and make a deal. They're out there. And if you find a bad one, guess what? There's always another deal. Hope you have a marvelous investing day. See you soon.